What's going on, everybody? Welcome to another episode of Global Cat FX YouTube channel, Sunday Weekly Outlook with Cam Connects. It's about to go down once again, so get ready. Last week, we had a whole bunch of people in our Discord chat that was making money on their personal accounts. They got paid out on their funded accounts. Everybody was getting paid last week, so it was great. But now that we are beyond that, we don't like to sit and rest on our past wins. We like to focus on the now. So we're gonna get right into it and let you guys know where our eyes are set for this week. As I've been looking at the charts this week, I see a lot of liquidity in the market. There's a lot of liquidity, and what I mean by that is that financial institutions are collecting people's checks. They're taking people's stop losses. They're spiking down, they're spiking up, and just taking everybody's money. So they're getting ready to make that real push to whatever side, upside, downside. They're getting ready to make another push in the correct direction after collecting stop losses, because the only way that really the markets move is if there's enough volume in the market. When you see the market going up and down like this, that means there's not much volume in the market. And every time it goes up and down like this, you have your retail traders that are buying and selling in this little area, thinking that it's time for it to go, but in reality the market is just collecting people's checks before it's time to go. And just so you guys know, this episode, along with any others until further notice, is not financial advice. We are strictly educating you and entertaining you with the knowledge that we have acquired over a combined 13 years of day trading in the industry. And we just happen to make money doing it. But it's not financial advice, so make sure that you're doing your own analysis before you decide to risk your own bread. So now that we've gotten that out of the way, I hope you guys have had a great weekend. Last weekend was Memorial Day weekend, and we had an extra day off to take the time to remember fallen family members, fallen friends, fallen soldiers. And so let's take a moment and acknowledge that. And last week, to start off the week, it was actually relatively slow. It started off slow anyway. And then, as you can see here, we're looking here at gold on the weekly time frame. It was essentially an indecisive candle. It went up, it went down, and this is a prime example showing you that the market just likes to spike up above previous highs, spike low below previous lows, and take people's money. Just 1 second. So you have 2 weeks ago, right? 2 weeks ago, you had that as your low point, and then you had this area right here as your previous high. But last week, price for gold actually penetrated above that high, and it penetrated below that low. And technically, what it's doing right there is that it's collecting more money in preparation for the real move. Now, what I'm seeing here, and before I get into my technical analysis, I actually want to dive into myfxbook.com and take a look at the fundamentals, the news. For anybody who's watching this video and you don't know what the hell I'm talking about, chances are it's because you haven't jumped into our course, or you haven't jumped into my YouTube channel and started learning. So you know, a lot of the time, I'm not going to be able to start from square one on every single video. I'm just going to jump right into the gate for those who have been following up to this point and know the terminology and know the lingo. But yeah, man, like everything that we're doing right now, for the most part, aside from our funded trading, funded account services, it's free. Like the online course is free. Our YouTube channels are free. So dive in and take a little piece of the gold, no pun intended, and reapply it into your own strategy. So taking a look here, the news. For this week. All right, so the first thing that really pops to my eye is the Australian interest rate decision. Now, anytime interest rate decides to show its face, usually means there's going to be some chaos, potentially. Not always, but potentially there could be some chaos. Because anytime a whole country decides on what interest rates are going to be, that really has a direct correlation with the value of that given currency. So, if the interest rate goes up in the United States, that means that the value of the dollar is going to be weakened, because you're not only having to pay for the product, but you're actually having to pay a higher interest on that as well. So that makes the given currency weaker if interest rates go up. And then if it goes down, then obviously the currency gets stronger. So interest rate tomorrow for Australia. Let's keep going. This US balance of trade, that one could be a good one. That might have something to do with your import export, right? So imports of oil and consumer goods. So that one's going to be a pretty important one to take a look at. If you're in the market for any of these countries, just be aware when this news gets released, because you don't want to get randomly stopped out on a spike out because you were not aware of the fundamental news that was going to be released. So make sure you're paying attention. Let's keep going down the list. So you have jobless claims. That's gonna be a nice one. Oh, and what do we have here? Core inflation rate. That's gonna be juicy too. So I'm seeing a lot of news for US. I'm seeing some news for Australia. We got some China news. I don't really trade the Chinese currency. Do a little bit of Japanese, the yuan, but not China. For anybody who likes to trade Swiss, you got some unemployment rate coming up this week. If anybody likes to trade the Indian rupee, you have interest rate for them coming out this week. A lot of interest rate this week. So, to line things up in comparison to my technicals and what I'm telling you about, these financial institutions, liquidating people's trades by hitting their stop losses, it's aligning quite well with, what we're talking about here with interest rate, because interest rate is going to create a lot of volatility in the market potentially. All right, so there's that. So let's go ahead and take a quick look at my gold markup. I'm going to go ahead and give you an overall view of what I'm looking at. So overall, what I see is that price did not create a new high right here or liquidate trades. This right here is still the highest point. This one right here just barely missed it, but didn't meet it. Okay, so price decided to come all the way back down to the previous order block area, where price actually impulsed its way back all the way up to 2070. So right now it's retesting this area right here. Okay. And usually what happens is, you know, if price does this, there is a good shot that, you know, if price isn't actually looking to continue to liquidate trades and knock out people's stop losses and overextend itself, you know, chances are it's not going to come back down into this region down here. You know, we could be looking at higher low situations where the price for gold can go up from here. So I'm going to go ahead and drop down to the weekly time frame so you can see a little bit better. Let's get a little bit more granular, right? We want to make sure that we keep our charts as clean as possible so that, you know, we have that visibility of, you know, what we're trading. Usually, like, if you have too much shit on your chart, it might cause you to get lost. It might cause you to start reconsidering what your initial analysis was of the pair. So one moment you think buy and another moment you think sell. It's, you know, it's important to keep things crisp. It's important to keep things clean and organized when it comes to doing your technical analysis. So taking a look at this here, right? Price broke out of this area. Price broke out of this area right here. Impulsed up. Nice move to the upside. And then you have market exhaustion with this candle wick right here. Price then goes into a range for the next 1, 2, 3, 4, 5 weeks, 6 weeks almost, right? Before it actually breaks below this level right here. So what I'm seeing here is that after price impulse to the upside, and you had this sideways range motion going sideways, price impulsed out of it, okay? And when it impulsed out of it, it came back down to, again, that previous order block area where that initial impulse took place. And usually when that happens, there's a good shot that it could go back to the highs again. So that's kind of what I have for my analysis on gold. Going a little bit more granular. Okay, we're gonna go down to the daily time frame. I'm gonna get rid of some of this stuff so I can really show you guys what I'm seeing. Okay, so this wick right here, boom, that was ultimately a retest of this candle impulse. Okay, this is a retest of that candle impulse. So what I see is that price, when it started coming into this sideways motion, it had trouble actually getting all the way back down there, but just recently, 4 days ago, it actually came down and liquidated anybody that might have had a stop loss below this retest wick. So what I'm anticipating is another push to the high side. I would like for it to come back to at least 1884, 1885 before we start seeing, you know, another move, you know, possibly a correction. But it's all about making sure everything lines up. You have to have everything line up. When I say line up, when you're day trading, you want to find and locate as many confirmations as possible. So one confirmation in this scenario would be, you know, this demand zone area where price impulsed up. So you have, you know, this pushed up here, and then obviously this large move, and now price again retested back into this area, and now it's starting to gradually make higher low situations. So I'm keeping an eye out for it to go a little bit higher based off that demand zone. And then on top of that, you have your higher lows being, you know, the lowest low here. You have the next one potentially being right there. And the reason why I marked that one as is because this 3 candle formation, you would call a pin bar. If I dropped it down to the 4 hourly, you probably see it a little bit better. There it is. So you have that move to the downside. You can see that price started losing strength based off the size of the candles, and then price impulse back up into this region, actually broke back above it. And then now we're actually retesting another order block that is in the 4-hour time frame. We're retesting a previous area where price broke out before. So I'm looking at this to go at least back to the previous highs, you know. So we'll for sure look for a take profit 1 being here, but I do want to see it make new highs. That's my anticipation for gold this week, is to push up higher and create new highs. And then if you just keep going down, like you start large with large time frames, and then as you continue to go down, that's where you start to locate more and more confluence, more confirmations, more more confidence in the trade that you're looking at, right? You start in the big time frame so that you can get an idea of where the market is going on a macro scale. But when it comes to actually day trading, and maybe you're trying to get in and out of the market by the end of the week, you need to go down to the smaller time frames, the 4-hour, the hourly, so that you can, look to collect 50 to 100 pips and be done for the week. Take your money and get out. And that's what we teach over on our online course. Cam and I, we partnered up together, and we have a chronologically structured online course, totally for free, to teach people how to do this. Because at the end of the day, God forbid something happens to us, you gotta be able to be self-sufficient, right? You can't just depend on somebody to make your bread for the rest of your life. So get into the course. The link will be in the description for people who are watching this on YouTube. Make sure you subscribe, because this is going to be a continuous thing. We're going to be on here every single week, showing you guys our visualization of the market. So make sure you are tapped in, get the notification bell and all that good stuff. So that's my analysis of gold. Cam, so that I don't overstep, what pairs are you looking at the moment so I don't do them?
Currently right now, focus on EuroCAD. I have pretty much to a T the exact same analysis for gold that you have. And then I'm actually was marking up Euro JPY earlier today. And it's actually playing out, so that's smooth. But yeah, so just those Euro pairs, EuroCAD, Euro JPY.
Okay, perfect.
Yeah.
Okay. Are you ready to jump on and share your screen, or do you want me to do one more pair?
You can do one more. You can do one more. Or actually, let me do one, and then you hop back to yours.
Easy. Okay, 1 second.
Perfect. Let me share mine. Can you see my screen?
Yes, sir.
Perfect. All right, so this is gonna be a quick one because EuroCAD looking, or not Euro, yeah, EuroCAD is looking real nice, but I'm actually want to highlight Euro JPY right now, actually, because this one's so smooth. I've been using the RSI a lot lately too, just for like another confirmation. So as y'all can see, for those that don't know, the RSI is a relative strength index, right? So you're utilizing this for just seeing what is being overbought, what is being oversold, or what is being equivalently balanced throughout the market, right? And so if you look at this portion up here, right, where it's like purple and yellow, go Lakers. Anything that's 50%, Lily's laughing too. Anything that's like around 50%, that's just like middle ground, right? Market's balance, right? I wouldn't use RSI for confirmation, right? Everything that we utilize in this market, as far as like indicators, moving averages, RSI, Bollinger Bands, all that stuff, those are just confirmations to the overall goal. I will never use an RSI to place a position for a trade. That's not enough of a confirmation, right? And I actually had a crazy week last week. It's not in a good way either. You know, like I took quite a bit of losses. I can be transparent about that, and I understand why I took those losses. And like I've told people before, that is the biggest thing, and that's a life lesson. Like anything in life, like if you take a loss, don't just hold that L. You know, learn from it and make it a win by learning from it. And so for me, right, I, like Josh knows this about me, like I try to anticipate what the market does before it even does it, right? And that is completely not the right way to go about it, right? We simply react to what the market gives us. That is trading. You react to what the market gives us, and it gives something different, then readjust, reanalyze, and then react again. So with that said, looking at Euro JPY, right? So as you can see up here, anything that's like around 65, this is my numbers, right? 65 and above, and then like 30 and below is either overbought or oversold. So anything that's around this area up here and it's above it is overbought. So I'm gonna look to sell that. Similar to what happened right here. This is way overbought, sold. Same situation here, way overbought, sold. Now, can I say it's gonna get to that same take profits where it got down to that 30, 20, you know what I'm saying, 30% margin? I can't say that for sure, right? But we're gonna have some take profits along the way. That might be like my take profit 3 in the end all, but you know, that 60% and that 50% margin is where I'm gonna have my other TPs. And just looking at this right now, right? So price loves to do what we call a pullback. So when we mark up, I love doing this, I'm just delete it. So when we mark up a chart, right, we see that price will get to a certain point, and then we're like, okay, it's gonna totally just flip, right? So we're gonna just react to that zone, and then have some consolidation, and then turn around and goes way to the other side. Like that's not how it goes, right? So like, you know, any like new retail trader is gonna say like, you know, from here to here, I see price gonna go up to here, and then when it gets up to this point, then it's going to, you know, turn around and go back down the opposite way. Now, to remind you guys, we're at the 4-hour time frame, and I don't want to get too, I don't want my verbiage to get too like out there. I want to make it very simple because I want everyone to be able to understand what I'm saying, right? Because this is going on Josh's YouTube channel, and so anyone that's a new trader, been trading for a little bit, or you're expert, I want you to be able to understand what I'm saying in this video with this analysis, because it's very important. So like when price gets up to this point, right, it already knocked out this area right here, this point of consolidation. So price started to see that it's making higher highs, higher lows. That's a confirmation that we have to see the overall trend of the market. So I'll just mark it real quick. See, this is a low right here. And when price likes to make, you know, a higher low, and then it creates what? Another higher low. And I even missed one right here, but that's okay. And then it continues to make those patterns. That's confirming that price is starting to make its way upward, right? And we can look at it the same way here, right? This high, and then right here, you know, price didn't really continue up past, you know, the previous high until it finally did, right? It finally broke, you know, this previous 4-hour high, and then this one as well, and then it just took off, right? And then as price takes off, right, now you want to, for me, I would never enter in this area. That is not a good entry for me personally. I like to enter early, as to where then I can kind of let my trade sit, and then it can just ride. So since I did miss this area, like I entered way down here back in May, and then, you know, I took my profit out early because I just didn't see it shooting up this much, right? And so when price, now that price last week, right, it got up to this point, right, and I thought it was going to sell off earlier, right, but no, price didn't. Price actually stopped on it, and you can see this last candle, right, it went up roughly 50 pips, right? So that's a good amount of stop losses that price took out right there. And so understanding this area too, what number is this hovering around? That is 140.00, right? bank zone, whole number, right? You definitely want to pay attention to these numbers, right? So like 13.8, 137.0, 136 point, these are very, very strong institutional, some people like to call them numbers. And banks revolve around those numbers, right? So I like to look at them and understand too, we say zones, right? Bank zone. So yes, I look at this number, but I'm not stuck on that number, right? So you'll see me in my markups, I have, like a lot of these boxes, right? And that's what I utilize to capitalize in that zone area, right? So when price gets down to the zone, then I know to react within that area, right? So I like to have my zone relatively about like from like that bank number, like 15, 20 pips up, 15, 20 pips down, and then that'll be like my whole zone. It's around like 40, 50 pips of where price can have some price action, consolidation, and then finally make its overall move once it does. So all that to say, in total, straight up, I have price falling all week for Euro JPY. And I'm not marking GJ, but they do move similarly. And I was actually talking to a buddy of mine earlier this morning, and we were doing some markups, and he had the same analysis for GJ, but we'll see. I didn't mark it up, but specifically talking about Euro JPY, I have it falling all week. I actually have it selling currently, and my stop loss, I'm actually about to put it into profit, but yeah, that's what I got for Euro JPY. So I'm gonna go ahead and zoom in, and I'm gonna show you guys in detail exactly what I'm looking at and what I'm hoping for, right? So let me go ahead and take this RSI out because we already know it's overbought, it's selling, right? So I'm gonna just take that out, and I'm gonna just full screen this. Oh, that's so beautiful, isn't it? Just straight chart. I love it. So when price gets up to here, right? So once price broke that, that 140 range, right? That bank zone, and went up to that half mark, right? 14.5, that's half of like that bank number. I'm trying to like explain this as best as I can, because like it's like Josh knows, man, when you be trading, like sometimes it's hard to articulate what you want to say. I'm an alien with this shit. So when price gets up to this area right here, and then it starts to reject, right? Now understand that price isn't going to just sell and then keep selling. It has to retest a previous area where price gain its strength from. So once price does retract off this area and then comes back up to here to possibly retest, that's when price is going to start to fall, right? So earlier I did say I'm going to move my position into profit, my stop loss into profit, making my trade risk-free. I'm not actually going to do that yet. My stop loss is at the 141.100. So that's like 10 pips away from right where I think price might actually shoot up to, like price already shot up here, and I personally don't think that price is going to continue to shoot up even more. I think it might retest this area, but just in case it does, I'm prepared for that, right? And so now, like I call it a night trade, I can just go to sleep, and I know that price, I have it marked up, but I have it marked up that price will continue to drop. And so my first take profit, right, well, not that far away, no $5 lot, and then go from right here. I'll just use this then. So I'm up like for 350. Oh. So I put in a sell limit for this one. I'm trying to get better at those, because then I can really do better entries. I don't like to call them sniper entries, but just better entries. So my first TP will be this 138.5, right? So it's 185 pips. That's my first TP. My next TP will be roughly around here. So that's like another like, I don't know, like 20, 30 pips. And then overall, I have it dropping. Let me exit out of this. Go back to the 4-hour. Right, and I like to trade safer than I used to, right? Like a lot safer. So where price, what was once support, that's newfound resistance, I like to make my take profit a little above that, right? There's already going to be some drama in this area right here. So I'm not gonna even put myself through that, right? So I'm going to make my take profit a little higher, my TP3 as far as that goes. So my TP is going to be right there, right? Oh, actually a little lower than that. It's going to be actually at that 137, and I'll be like my last take profit. And so what I'm hoping, right? So that's almost 300 pips. So what I'm hoping overall, what price is going to do, right? Let me get my path out. Right, I already hit this area right here. It's going to drop. It's going to retest. Might consolidate a little bit, and then when it does drop, right, then that's when we're in, right? Because we want price to get below previous highs, previous lows. As price gets lower than previous highs and previous lows, then we can start at like not adding other opportunities of confirmations or other avenues of confirmations, but that right there is a big confirmation in itself. And then I'll start to use my moving average. I'm not gonna show you all that right now, but I'll start to use my moving average, and that's another confirmation that I use personally in my own trading style that allows me to confirm, you know, how far price is gonna drop to. But yeah, I'm simply right to like this week just trading off of price action, exhaustion, inflation, you know, simple and plain. Trading really is not that hard, and sometimes we overcomplicate this shit. It's really about timing, and it's really about patience, right? Because like I can say this is going to sell all day, but then if me, Billy Bob, and JD or whoever, you know, have a tighter stop loss, and then it falls, you know, whoever's stop loss was a little bit away from their price, or maybe had a smaller lot where they get their count blown or what have you, all those little risk management details matter. When it comes to risk management, that shit is everything, like everything. But don't be like too safe, right? Don't be too safe. That's you don't want to be too safe. Make some money in this market. It's here for you to make money in this market. It's like a what $70 trillion turnover every day. Like that means out of 70 trillion, how much of that you gonna take? So don't play it safe, too safe, but play it smart. And make your cheese, dude. Make your cheese. It's not a hard skill set. We make it harder than what it needs to be. You gotta just believe in yourself, and when you take a loss, you have to learn from it. When you learn from it, it's everything. And that just makes you a better trader at the end of the day. And like Josh said in the beginning of this, like a lot of what we do is for free because it's important. This is education. It's something that school should have been teaching us and they didn't. And so we, you know, our dream is to really personally bring it to the hood, like bring it to a lot of people that need this information that's going to give them their power back, you know, change their financial situation, and alleviate, you know, some stresses in regards to finance and all those kind of things. So appreciate y'all for letting me hop on this Global Cap family. But that's my EJ markup.
Nice. Thank you, Cam.
Yeah, bro, anytime.
Oh, so for the most part, yeah. So GJ, I have GJ going down as well, just to kind of piggyback on what you were saying about EJ and GJ moving quite similarly.
Mm-hmm.
I marked them up. I marked it up, and I see the exact same scenario. Let me show you. All right.
Oh,
So,
GJ, super nice.
yeah. So here's what I see. So if I came all the way back over here, you know, again, it goes back to liquidity, and understanding what the purpose of liquidity is. And you know, liquidity is the financial institutions, you know, overextending. You know, this goes into, you know, Cam's talks about the RSI, right? When things are overbought or oversold, that's when most people get liquidated. And what I see right here is that, you know, you have these right here, 1, 2, and then 3, 4 candles that are generally in this supply zone area. And then before price decided to actually push to the downside, it was this last candle right here that poked above all of those that I just highlighted.
Mm-hmm.
Taking out people's stop losses right before it was time to dump.
Yeah.
So, so what I wanted to see was for the market to go above this wick right here, liquidate that one.
Hey Josh, you want to share your screen?
Say it again.
Could you share your screen?
Can you guys not see my screen?
Yeah, I think we're still looking at Cameron's screen.
No way.
Is it, this is my screen. Can you see this one?
I can see both. You can't see Josh's, guys?
No, just Cameron.
Oh,
All
it's
right, let me
still
go
at one
ahead.
screen. Thank you, guys. Thank you. Let me know when you can see my.
Y'all see it now?
Yep.
Crystal clear.
Nice.
Awesome. So let me go ahead and talk about this one more time. So this area right here, this is a supply zone right here, and then for 1, 2, left, came back, 3, 4, 5, 6. These areas right here were ultimately your resistance. So anybody that was getting in for a sell right here, they probably put their stop loss right above this wick right here. But this candle, before shooting down, spiked up above all of these right here and took out everybody's stop losses, creating more volume in the market, more money in the market, and enough strength for it to drop. So what I wanted to see was, going back to current price, I wanted price to break above that line and then come back below it so that we can start looking for another push to the downside. Because again, when you have, penetrations above previous ceilings and then it comes back in, that's the market liquidating a whole bunch of trades and taking people's money in preparation for a dump, potentially, not always. But because we are, if I just drew 2 lines and just did this, like we're in a little channel, right? Give or take. So we're at the top of that channel. So that's one nice little confirmation that we're at the top of the channel, which means we should be looking to sell at the top. We are back below the previous high after liquidating it. So that's another confirmation. And let's go back down to the 4 hour. So, and then on top of that, we are currently back in a supply zone right here in the 4 hour. So if if chances are, if you're not like, like Cameron, where you just straight up snipe pairs like nobody's business, and you didn't get in all the way up here, you didn't get in all the way up here, then like he said, you just want to wait for it to come back up and retest a level. And usually where price likes to retest are areas that used to be a support and is now a newfound resistance, aka ceiling. So now that we're back below here, this could serve potentially as a ceiling. So if you wanted to wait and see what happens, you could, if you really want to, you could get in now, but you better have your stop loss out the fucking way. That's what I'm gonna say. Like, you need to have your stop loss above this previous impulse right here. You need to have it above here. And then you're not getting into this trade unless you can see at least it really just depends on you. Do you want a 1-to-1 risk to reward? I like to say at least 2-to-1. But yeah, like make sure your target is at least a 2-to-1 risk to reward, in my opinion. And what I'm potentially having a first target for GJ would be, hold on, let me see something. Wait. Yeah, my first place of interest would be around 162, 100. Because what I'm seeing here, because again, I look for these wicks to be liquidating, you know, their previous counterparts. And what I see right here is just a sequence of candles that, you know, this candle right here liquidated these previous two wicks and then pushed up. So I would like price to at least come back down to here, and then we'll reanalyze the chart and see if we should, you know, take partial profits, leave it in, because, you know, we think it's going to go down a little bit further. You know, if liquidation is not the objective for the markets, then they'll usually go to areas that don't have wicks. And when there are no wicks, that means that there was no retest. And if there is no retest, then that area needs to get filled in. So we could be looking here as a target, right? So we could be looking at that. So it'll be a nice little 2-to-1 risk to reward. One thing that I like to tell my students is just make sure you're using your alerts. Like on TradingView, you can download the app on your phone, so you can have alerts, push notifications go off on your phone whenever price gets to a certain price. So you can just do that, add alert, boom, done, and then you get a notification. And then, you know, once that alarm goes off, that gives you the opportunity to go into your app and, you know, reanalyze what the market is giving you so that you can react to what it's giving you. But that's all I got. Cam, you got anything else? As far as saying good night to Lily. All right, y'all. Well, thank you for jumping on to this week's weekly outlook. I think it's got off on you. Cam, you got anything else?
No, honestly, brother, I'm honestly just looking at EJ this week. I'm gonna just lock in on this one, and then gold, right? But I'm gonna take a break from USD CAD. I did some US 30 markups, but we ain't going that far. So yeah, I'm gonna just stick with the EJ today.
Okay, bro.
Yeah.
Well, let me go ahead and stop sharing. All right. Yeah, so thank you for you guys that are jumping on, watching it live as we speak. I appreciate y'all jumping out. I hope you found some value in what we're sharing. You know, I know one of you guys are students. And Kevin, nice to meet you. Maybe we could chat. But yeah, like I hope you found some value here. We really enjoy doing this. You know, they, like Cam said, they don't teach this type of stuff, you know, in your traditional educational system, unless you're in Florida, which they just recently changed that, which is great.
Yeah, good shit, Florida.
Yeah. But yeah, we have some very, very big goals in mind for our companies, and we honestly believe like something as simple as a course that has information that you could locate anywhere on the internet. Like, we make money trading. We don't need a monthly subscription. Like, for what? We make money trading. So yeah, man. So I'm blessed to be here, blessed to have y'all here. Make sure, for those of you guys watching on YouTube, make sure you like, subscribe, and follow us on Instagram. Make sure I'll have Cam Connects on the description as well to make sure you follow him. And we'll see you on the next video. Peace.